Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hello, folks. Bill and Brian here with Energy Rogue, and we're here for a quick little lesson on LNG freight. So,
led by two industry veterans, Bill
there,
Shanahan and Brian Pieri, as they host their weekly
That was supposed to be The Rock. Okay. Anyway, yeah.
As they host their weekly commodity market recap.
What have you done, brother?
I don't know. I guess I broke it. So listen, we are going to talk about LNG. The United States has really transformed its business in the last 10 years around LNG. If we go back 10 years ago, we hardly exported any natural gas out of the United States, and now we are sending so much via exports. And just to give you an idea of scale, we are looking at, let me get this up. If we take this back, and I'm only going to go back 8 years, but let's take a look at LNG and where we were in 2017. So look at this chart. We went from 1 to 2 BCF up to over 14 BCF. So so that is a significant portion. Another factor is Mexico has continued to increase, went from 4 to 7, and that path is going up. So we are adding exports at a time that we are actually static on imports. And when we look at that exports, it pardon me, it impacts the market because we evaluate Henry Hub versus JKM and TTF. What are JKM and TTF, Bill?
So JKM is the Japan Korea marker. That is the price of LNG delivered to a generic delivery point in Japan, Korea, Asia. TTF is the tidal transfer facility out by the Netherlands. That is basically the price of LNG delivered to Europe and to the Netherlands. Now, there are additional charges after that. So that's not the absolute price in those two places, because they have to get to the specific ports. But that is where it is. That is the benchmark that we're able to use. Consider it sort of like an index, like you see on land in the U.S. So, right. but that tells you basically what it costs to get natural gas all the way to Asia and to Europe.
And that's the reason that we wanted to really talk about it and talk about exporting LNG. Most of it comes from the Gulf of Mexico out of the United States and has a Henry Hub-ish price. On a delivered basis, the price is a little bit different. We're going to ignore that for the time being for this exercise today, but we really wanted to map out, okay, if you have Henry Hub at 260 and JKM at 12 and TTF at 10, well, how much does it really cost to get there? So
Brian, I think we need to start with first people understanding what LNG is. It's liquid natural gas. And for gas to be liquefied, it has to be basically chilled. And when I mean chilled, I'm not talking, oh, well, it's 65 degrees. No, to get it into a liquid state, gas has to be reduced to negative 162 degrees to get to that point and maintained at that temperature until it reaches its destination. And so we are not going to talk about what it takes to do all of that. We're only going to talk about the freight once it gets on board ship and moves to one of these 2 points, so that you will there's a whole lot more there's a whole lot more processes and cost associated with that that we don't necessarily cover, particularly in this presentation. But realize that you just can't take the Henry Hub price and the TTF and divide them, and that's your freight. That's why we're going through this. That's why we're going through this process, so you understand it's a tad bit more complex than that.
We are high grading a lot of variables. Each one of these variables might include multiple variables back behind it. So this is a high level example of how much LNG freight costs from the Gulf of Mexico here over to Japan, Korea, and over to Europe. I'm not gonna say a destination because there are multiple destinations. So that is the goal, so that we can understand Henry Hub at 260, JKM at 1261, and Henry Hub at 260 versus TTF at 1062. Well, how much does it really cost to get there? So that's
Brian,
what we're going to cover today.
This reminds me a little bit of Wall Street. You know why?
Wall Street loves to use confusing terms to make you think only they can do what they do.
Yeah. Well, that's what we're going to dissect today.
We'll buy this a little bit, right?
We are accepting questions. So if you have any comments, questions along the way, we are going to probably save most of those for the end, but we may inject them depending on the flow and cadence. But LNG freight. So we've already established if Henry Hub is at $2.60 and JKM is at $12.61, let's round this off and say $3 to 12 and 10. So what does that exactly mean? And as we look at this map, you will notice one thing, that we go through the Panama Canal when U.S. Gulf of Mexico LNG goes to Japan, Korea, and it doesn't have that obstacle here. And because of that, there's going to be some differences in some of the freight costs. So we're going to dive through that. So what is the importance of understanding LNG freight? Well, the market impacts. There's fluctuations in freight rates that impact the supply chain logistics. So you have the price of the commodity at Henry Hub. So you have the price of Henry Hub right here has volatility. The price here in JKM and TTF has volatility, plus the ships and their rates on what they charge has volatility. So all pieces of this change on a daily basis. So the decision making, knowledge of the rate changes, knowledge of the Henry Hub price, what are the supply demand dynamics in the United States, how that's going to impact the LNG price in Henry Hub, what weather is doing in Japan, Korea, what weather is doing in Europe. All three factors move around significantly. So what are the key
I think it's important to point out that any fluctuation here in product or costs has a significant impact on the price of gas, and probably is one of the most volatile areas of natural gas demand that we have, because one plant can go down and all of a sudden 2 BCF is dumped back on the market. And then you take 2 BCF and dump it back on the market, price changes dramatically.
Right.
And so that's why it's important to understand everything around LNG if you're trying to understand the natural gas market.
Well, and it's it's important to understand and monitor that, and that's part of the reason that we look at this every single day. And what you'll notice is that LNG, which is this purple line right here, and Mexico, they represent over 25% of the demand stack. So obviously there's going to be fluctuations between winter and summer, but that is going to be super important. So what are the key factors influencing freight rates? Supply demand dynamics, seasonal variations, and geopolitical events. And now geopolitical events, if you think about LNG routes, there are multiple wars that are actually happening right now, and some of these some of the shipping routes, instead of going through the Mediterranean, they are actually going all the way down here, up here. So some of the LNG that comes out of Qatar is having to take longer shipping routes. Now, what that means is there's a with a longer shipping route, you need more ships. So you need more ships to throw into it, which means there may be less ship availability out of the US. So rates can change and fluctuate based upon geopolitical events, not necessarily in the line of sight from the Gulf of Mexico to Asia and the Gulf of Mexico to Europe. So, and again, we are going to accept questions. So if you have questions along the way, we are only scratching the surface. We are going to target about 30, 40 minutes of this where we cover this. Bear in mind, each one of these could be a day-long session, understanding the supply-demand dynamics and how that impacts LNG freight rates, seasonal variations and how that impacts freight rates. Each one of these has a lot of nuances to them. Right, Bill?
That's correct. I mean, when you think about Qatar, they have to ship through the Suez Canal. Anything that goes through the Suez Canal has risk associated with it. If it doesn't go through the Suez Canal, then it goes around. So worldwide, there's only about last number was 2022 number that I saw was 735 LNG tankers.
735.
So, right. And the entire LNG, that's worldwide. That's not just the U.S.
Okay.
And that number is jumping. They can put out about 30 to almost 40 LNG tankers a year, new ones. Now realize once they build them, the smaller ones become less efficient and they sort of go away or go to shorter routes. And so there's a constant movement in this fleet of LNG tankers. And the LNG can grow faster than they can build the ships. And so that's an important part to remember, because let's just take an example of a 2 BCF plant. All right, that plant's going to take 2 BCF. And let's say all they do is send it to Europe. I want to keep this example simple. So we're going to show you here in a minute that a Europe trip is about 20 days over and 20 days back, if I remember right. So
yep,
40-day round trip. So each ship can hold probably a day and a half worth of production, maybe 2 days on some of the really big ones. So let's say it gives it 2 days worth of production. So in order to cover a full cycle, you need 20 tankers to service that one plant
in a single month.
And it doesn't. That means everything has to go perfect.
Right.
That you can't have any port problems. You can't have anything else. So anyway, what I'm saying is that for every plant, it takes almost a year of tankers.
Yeah. And there's what we're saying is we are only scratching the high level surface here. Supply demand dynamics have massive impact on LNG rates. Seasonal variations, massive impact. Geopolitical events, massive impact. We're going to ignore these for this conversation because we are just hitting it at a very, very high level. So,
and I guess what I'm saying is that the scarcity of ships will change the freight rates, because we have seen almost 1,000% increase in freight rates go up and down on LNG in the last 4 years.
Yep. So the current trends in the LNG freight rates, Atlantic spot charter rates have dropped recently to about 53,000 a day, with Pacific rates at 55,000. So factors include improved U.S. to Asia economics and Suez Canal issues. There's been a little bit of relief on the Suez Canal, so that has actually dropped the rates. But I want to point out 53,000 a day, 55,000 per day. What's the highest number you've seen in the past couple of years, Bill?
Oh Lord, I think I've seen as high as $250,000 a day.
Yeah. So think about that. There's volatility. When we discuss some of the volatility, you have to bear in mind there's volatility on the price at Henry Hub. There's volatility on the shipping rates. And that is a 5 multiple that we've seen. Now that's over 2 years, but you have to bear in mind I saw one from just 1 year ago that was double this rate. That was at $100,000 a day. So these rates do change frequently, and they do change. They're negotiable. Some are under long-term contracts, but the route, the per day rate, all of these will change frequently and consistently. So then you get into route preferences, shifts to longer, safer routes due to geopolitical risks impacting costs, such as adding a route around the Cape of Good Hope over the Suez Canal can add 20 cents per MMBTU to freight cost. And we just covered that instead of going up, because if you look at LNG production, I want to say US is a new entrant into the market.
Absolutely.
Australia has been a massive impact, and Qatar. So
Right.
those are the 3 biggest LNG exporters. Now you think about imports. Let's actually switch to a different color. Bill loves when I draw. So if you look at exports, you have, or imports, regasification. Here, there's also regasification all along Asia,
Right.
all along Asia and India. So you have massive, and you do have some minor regas in other areas of the world. So so that's what route preferences that can add some nuance to it as well. So now let's estimate the time travel. How long do you think it takes, Bill?
Well, if we were driving it, it would be faster. But when you're going on the ship, getting out of the Gulf Coast and getting over to the Netherlands is 20 to 25 days. That's all based on mostly storms.
Okay.
They have to go around the storm if not. And so that's, and it's about another 10 days to get to Japan, Korea.
Okay. So the time from the Texas Gulf Coast to the Netherlands is approximately 20 to 25 days. Texas Gulf Coast to Japan, Korea, about 30 to 35. Fuel usage, round trip to the Netherlands, 4,000 to 5,000 metric tons of fuel. That's a lot of fuel. And Japan to Japan or Korea, it's actually more, 6,500 to 7,500 metric tons. So think about it. The ship has to carry all that LNG plus all that fuel and burn it along the way and then refuel once they get there. So using LNG as fuel reduces emissions, but can increase upfront costs because they have added infrastructure that they need on the ships to utilize LNG.
They
As
have to retrofit the ship, and that's usually, I think I read where that's like a $20 million bill just to retrofit a ship to LNG.
Whoa.
It's not an easy process.
Whoa.
Because they have to get rid of the bunker fuel tanks, and there's a lot to it, and then they also have to put in their own fuel tanks for it. They don't burn the fuel they don't burn the cargo.
Yep.
And so yeah, it's and the cost of one of these ships, a new 𝐞𝐞, I think I was reading yesterday, is about $330 million to build.
Okay. Well,
So,
as we're about to get to, they do make pretty decent cash flow, so
yes,
there is a decent cash flow. So we're about to get into that. And again, these are high level, 50,000 foot. If you have LNG, we actually have one of our clients actually, we're in a discussion with them about LNG, and it's very specific to their use case. So that is going to be super important. So let's break it down piece by piece. So we've got the travel time, 20 days, and I'm choosing the low side, the quick path, 20 days to Europe, 30 days to Japan, Korea. Metric tons on the fuel, 4,500 to 7,000. The current freight, 55,000 a day, and I'm calling it 55,000 on both examples. So the freight cost, which is going to be the current freight by day times the number of days times days, is going to equal 1.1 million. So that is for a 20-day journey. So you can think about it this way, that that ship, just on the cost alone, on what they're charging right now, is 1.1 million. Some people have long-term contracts. Some people have short-term contracts, and those short-term contracts hold a lot of market volatility. And let's see, I'm going to pause there before we get people falling asleep. Angela, thank you for joining. Do you think at one point in the future, most ships would add the infrastructure to convert the LNG to fuel? Angela, I'm going to state my opinion. My opinion is yes, because generally speaking, if you think about LNG, it is a natural gas-based price versus a diesel price. And I imagine that diesel is always going to hold a significant premium above natural gas on a molecule basis, but it'll need to be retrofitted, and they'll do that at the right time. As a matter of fact, I think many of the newer ships have already built that infrastructure in. Does that sound right, Bill?
Yeah, I think the newer ships are actually accommodating that. Probably what I would think, Angela, is they're going to build it where it has a dual fuel. Because when you look at natural gas, we say, well, it's cheaper than diesel. But its volatility is through the roof compared to diesel.
Yep.
And so they're looking for something on a long-term investment like that you have some sort of reliability in purchasing fuel. And so I think I've seen a couple now start going to dual fuel where they can burn whatever they need to burn. And they're going to be required in different countries to burn different type of fuels based on emissions. And so they might be burning LNG while they're in the United States waters, but if they get over to other waters or in the open ocean, they might convert back to bunker fuel because it might be cheaper. So you're right. They're looking at this very closely, and LNG, I think, would be a very efficient burn. But back when natural gas was $9, I'm not sure it would have compared much to crude oil, to diesel and distillate. So I think that's the thing they watch out for. And the life of these ships are pretty long, so they'll survive many ups and downs in the energy market.
Yep.
So that's sort of a long way to say, yes, I think they're already converting to LNG fuel. I don't think there's going to be many retrofits because of it's cost prohibitive.
So you're telling me there's a chance?
Exactly.
So listen, let's get back to this. Angela, if you have more questions along the way, let us know, or anybody out there. We do see those comments and questions, at least from LinkedIn and YouTube. Never seem to get any from Twitter. That's either because not many people are watching us on Twitter, or we don't see them.
Or maybe it doesn't exist anymore. It's X, Brian. X.
No, I'm not. No, I will not do it. It is Twitter forever for me. So now when we look at current freight, you have the day rate of 55,000 per day times 20 days to Europe, 30 days to Japan, Korea, and that is 1.1 million to Europe, 1.65 to Japan, Korea. And that I'm calling it Japan, Korea. There's multiple destinations. China, it's intended to be Asia, but the index is called Japan, Korea marker, so that's what I'm going to call it. So now let's get to the fuel cost. And Angela, I currently evaluate this based upon the diesel or fuel bunker prices, which are currently approximately 700 per metric ton. Obviously, it depends on the port. It depends on where you pick it up, and it depends on the price on the particular day, because over the last month, you may have plus or minus $200 on this number. So I picked a number that I felt was representative, and at $700 per metric ton, your fuel cost is about 3.15 million to Europe and 4.9 to Japan, Korea. So now LNG capacity. Tell us a little bit about LNG capacity. We had a long discussion yesterday, didn't we have a long discussion on LNG capacity?
It was a
yesterday?
long discussion. It took quite a bit of research because this is with the popularity of LNG, they've built bigger ships. So this 80,000 cubic meters, and we believe me, there was a lot of math done yesterday, converting cubic meters to MCF. Yeah, it was a animated discussion. And so,
are you trying to start a fight? No, I'm simply stating.
This right here is considered a large. Yeah, this is considered a large LNG ship, is 80,000 cubic meters. However, the new one's coming out now called Q-Max. Q. What country starts with Q? Oh yeah, Qatar. That's why they're called Q-Max. Is actually now 220,000 cubic meters of gas.
Can that fit through the Suez Canal?
I think it can, because what they did, they just made it longer, not wider. And
okay.
So,
okay.
And so, but the thing is that, man, that's a lot of risk in one ship when you start thinking about costs. So the insurance must be out of the roof on that particular ship.
Right.
And realize that they use a membrane type. There's actually 4 different ways to store the gas, but membrane seems to be the most efficient. They have to keep it at that minus 162 degrees that we talked about earlier, for the whole trip. Any loss of the product is losing just money out through the air. And so anyway, it's not just put it in a tank and ship it over like you do with crude. There's a lot to it. And so the 220,000 cubic meters is a significant improvement on the efficiency of the ship. However, that also means that it's going to be a whole lot. Yeah, look at there. Isn't that cool? There's a whole lot of
look at that. This is a person down here.
Yeah.
So think about it. Look at the size of that. That is a person right there. That's the inside of an LNG ship. So
it's important to note that larger ships can mean we won't need as many based on, so we decided this was it was 2.8 BCF. So if you roughly triple that, now you get 3 days worth of production versus 1 day of production that you could get out of a plant. So that means that plant now needs a third of the ships it needed before of the large ships.
Right.
But these large ships are not cheap, and they take a year to a year and a half to build.
Yep. So we chose 80,000 cubic meters because we felt like that would probably represented what we deem as the weighted average of LNG
it probably
ships
representative of the current fleet.
Fleet.
Right.
So this is what we mean, is that each one of these variables has nuance to it. So bear in mind, this is a high level example, but if you are calculating your LNG equation, reach out to us, give us a call. We can help you with that. And it's super important that you look at all these nuanced areas. But we have 2.82 BCF. So we have fuel cost, we've covered freight cost, and we've covered fuel cost. Now let's get to the cost of the cargo. So if we have LNG, LNG, I called it fuel. That's actually the cargo. So 3.1 BCF is what is needed to load the ship. So why is it 3.1 and not 2.8, Bill?
Well, because what you do, when you are loading the ship, you actually burn fuel. Now, what I mean by burn fuel, this is not fuel to burn to propel the ship. This is fuel to actually compress, and you have basically about a 10% loss on what it takes to get the gas into a state that it can be loaded into the ship. And so for to get 2.8 BCF is going to take you 3.1 BCF. And I know we're not going to go into that complicated stuff, but just basically it's a 10% loss. Just consider it a 10% loss.
Yep. So you need 110% to get 100% of the ship, and the ship's capacity is 2.8. So you need to mark that up by an extra 10%. So to load the cargo, you need to purchase. I'm going to call Henry Hub, as we were discussing here, at 260. I'm just going to, for simplicity's sake, call it $3. Because there is going to be some locational deltas and some extra transport that is involved. This does not include the liquefaction toll fee. That is a separate cost. So I want to be very clear about that, is that there is an extra toll fee on top of this, and that is negotiated contract by contract, facility by facility. So again, if you are currently looking at regasifying or liquefying, and you need help on those economics, reach out to us, let us know. We're happy to help. So we've covered freight cost, we've covered fuel cost. Now the LNG cargo is approximately $9.3 million at $3 gas. Now bear in mind that does not include the LNG toll. So let's break this down and look at it this way. So the commodity to load the ship requires $9.3 million. The freight cost, what you pay for the ship just to use the ship, and these are probably minimum numbers, I'd imagine, is $1.1 million to Europe and 1.65 to Japan, Korea. Then you have fuel cost, which is the metric tons of bunker. And again, getting back to Angela's question, which Angela, I appreciate you stopping in, and hopefully we answered your question about the LNG infrastructure to convert LNG to the fuel. But we are considering it a bunker fuel right now, and the bunker fuel cost is going to be correlated more to diesel prices. So it's currently around 700 per metric ton. And the fuel cost is 3.15 to Europe, obviously more to Japan, Korea, because there is a longer route. Plus, there's an extra variable at Panama Canal, which we are not going to cover. But I'd call that an extra dollar per MCF. So now the total value at destination is 13.55 or 15.85. Now, if you recall, we did see Japan had a higher value, about $2 higher than TTF. These are prices that we viewed yesterday on the prices, about $2 delta. And when we look at that, yeah, it's about $2.30 for that extra, and I'm going to call it fuel cost.
Well, wait, Brian, you're talking about total cost. You need to drop down per unit if you're going to look at per unit.
Oh yes, I'm sorry. Oh yeah. You're right. I was on the wrong line. So the per unit is actually a little bit compressed there at about, what is that, 80 cents. That's an 80-cent delta. So if we calculate this back to a per MCF, at destination, it's $4.80 per MCF and $5.62 per MCF. Now, if you recall from our earlier conversation, we had JKM at 12, TTF at 10. Now, you may be asking yourself, why is Japan Korea trading at 12 when it only costs, quote unquote, $5.62? Two reasons. Number one, there's all the shipping capacity has already been contracted for. Number two, there's variables that we have that require more research for a specific use case, such as what is the cost of the toll? What
Right.
is the upfront capital of the cost? Many of these contracts have a reservation fee associated with it just to have the right, and then an extra cost to actually utilize it. So
And
there's a lot of nuances there.
There's the other nuances that we don't have is that in their fees, they show the deadhead fee. You have to get the ship back to your dock. You don't just get a one-way freight. You got the freight to get it back.
Yep.
And so what we're showing you is just hard prices that we know about. And when it's all said and done, you spend more in freight almost than you do in the commodity at current prices.
Yeah. I mean, this is one-way economics. So on Bill's circumstance is if you have a freight cost and a fuel cost and they charge you to go on the way back, you have to double these numbers.
Right.
So that is the critical component that you need to look at. So
and it's never one-to-one, folks. They don't, one ship doesn't go there and then turn around and come back, turn around and come back. A lot of these ships, one will go there, the next one will go to Asia, then it'll go somewhere else, and then it'll go somewhere else. And so this is a constant movement chessboard going on all the time on these costs. And it's always dependent on what ship is available.
Right.
And where it is permitted to go.
Yep. And so now getting back to the example of a $3 Henry hub, you have Europe about $1.80 above and Japan, Korea about $2.62. So that's the current.
That is a bare minimum. That is the bare minimum. It has to be above Henry hub.
Yep.
To even begin to think about sending LNG over there.
Yes. So and I apologize. We never actually formally introduced ourselves. My name is Bill. My name is Bill.
Oh, wait.
No.
Is this formal? Do I need a tie?
No, we're going to switch it. I'm going to call myself Bill today. You're going to call yourself Brian. So
okay. Well, Bill, you know, that Bill guy is one of the best looking guys on the podcast.
First we'll make snow angels for 2 hours, and then we'll go ice skating, and then we'll eat a whole roll of Toll House cookie dough as fast as we can, and then, to finish, we'll snuggle.
That's right. That's what we're going to do. So we have created, Bill and Brian have created a website for industry energy markets. And this covers oil, natural gas, NGLs, refined products, electricity, and so much more. We're not going to bore you with everything that is inside, but we have developed a dashboard and put it into an affordable package. If you and your company are impacted by the volatility in the energy business and the energy prices, stay educated. And we provided a resource to stay educated at a very affordable level. Rogue Edge is only $89 a month, and that gives you access to 150 charts on supply, demand, imports, exports, storage stocks of oil, natural gas, refined products, natural gas liquids, electricity, and so much more. You get a daily email, weekly video insights, PDF reports, daily support and resistance, price and fundamental forecasts. And if you want a little guidance and help from our trading community, that is Rogue Premium at $179 a month. And that includes a monthly meeting with Bill and myself on you or your problems. As I said before, if you are evaluating regasification, if you are evaluating LNG exports, come join us because we can help you. And if you need a little bit more insight into the business, book a meeting with us for Rogue Advantage. So that is a little bit about who we are. Did I miss anything?
Sorry, boss, but there's only two men I trust.
Yeah.
Miss anything? Listen, come talk to us. Well, first of all, we do have fun, but we want to help you be a success in what you're doing. So we need to get that clip from Jerry Maguire. Help me help you.
And listen, a lot of people shroud the energy markets in complexity, and they believe it is
the wizardry school here in America.
Yeah. So a lot of people think it's overcomplicated, but you have to break it down piece by piece. And that is a sample of what we try to do, is take a look at a very large, complex issue and break it down into small parts so that you can walk away from this and you can understand a little bit more about how LNG is priced, how LNG freight is charged, what components to watch, because back at the source, Henry Hub has price volatility. JKM has price volatility. TTF has price volatility. And what we've just learned is this freight in between them. I'm not going to draw a ship because Bill would make fun of me.
Thank God.
But that freight in between holds volatility. And so listen, thank you for joining. We are going to stay on for a couple minutes in case you do have questions. So far, we haven't seen any come through. And if you really want to reach out and connect with us, you can drop us an email at rogue@energyrogue.com. And then, or I would actually urge this a little bit more. Come join us. It's only $89 a month to join Rogue Edge. And really, if you want to connect with us and have us input strategy on your business once a month, Rogue Premium is there, and you get to join our community where we discuss the markets. This is just today. So we discuss the markets each and every day. Some of it's on natural gas, and some of it is on crude oil, refined products, electricity, and so on and so forth. So come join us at Energy Rogue and energyrogue.com. And then if you have a question, reach out to us, rogue@energyrogue.com. We'd be happy to talk to you and even set a meeting. If you go to our website and you want to learn a little bit more about the service, if you want to learn more about what tier would work for you, you can use this Rogue Advantage and book a call with us, and Bill and I will help you and show you around and see what really works for you. So
come go rogue with Energy Rogue.
Yeah. So listen, that's all we have today, folks. I appreciate it. I don't have any more. Do you have any more, Bill?
No, you guys just reach out to us and we'd love to help you.
Yep. So listen, thanks so much for tuning in, and we will see you next week.